Hello, my name is Mayanka. I am accounts and a finance trainer from Uplatz. Today, in this class, we will discuss part 3 of aggregation of income, set off and carry forward of losses. Part 1 and part 2 is already covered by us in our previous video, in which we have discussed what is the meaning of aggregation of income, and we have also discussed some important concepts which are relating to the carry forward and the set off of losses. We have discussed inter-source set-off of losses and inter-head set-off of losses, and we have also discussed carry forward and the set-off of business losses, carry forward and the set-off of speculative business losses, carry forward and the set-off of specified business losses. Now, in this class, we will discuss other sections and the other relevant points which are relating to the carry forward and the setup of losses. So now we will start part 3 of aggregation of income, carry forward and the setup of losses. Loss under the head of capital gain. Section 74. If there is any assessee, he has any loss under the head of capital gain, then how we will set off it and how we will carry forward it. As per the provision, if there is any person who has the short-term capital loss, if he has a short-term capital loss, then the amount of short-term capital loss can be adjusted. It can be set off with the amount of, with the income of, with the gain of short-term capital gain as well as long-term capital gain. Is that if there is a short-term capital loss, the short-term capital loss can be set off from short-term capital gain and long-term capital gain. And if there is any long-term capital gain, then it will be adjusted, it will be set off only from the long-term capital gain. It will not be adjusted with the short-term capital gain. The long-term capital loss cannot be adjusted. The long-term capital loss cannot be adjusted with the short-term capital gain. But the short-term capital gain we can adjust with short-term capital with the short-term capital loss we can adjust with the short-term capital gain and long-term capital gain. So now we will start our discussion losses under the head of capital gain. Carry forward and set of the losses. Carry forward and set of the losses. Section 74. Section 74 provides and it is explained how we will carry forward and set off the losses when there is any losses which is arise under the head of capital gain. Under the head of capital gain, there may be short-term capital loss or there may be long-term capital loss. Under the head of capital gain, there are two types of losses. Number one, short-term capital loss, and number two is long-term capital loss. So first, in the case of short-term capital loss, the amount of short-term capital loss can be carried forward. It can be carried forward. First we will set off it. So if there is any amount of short-term capital loss, then the amount of short-term capital loss we can be set off against the any gain, whether it is long-term capital gain, whether it is a short-term capital gain. Is that the amount of short-term capital loss we can adjust or we can set up with the long-term capital gain and the short-term capital gain. Section 74 provides that where for any assessment year, the net result under the head of capital gain is short-term capital loss or long-term capital loss. Then the loss can be carried forward for the following assessment year to be set off in the following manner. Number one, short-term capital loss. If there is any short-term capital loss and it is carried forward in the short-term capital loss, then such short-term capital loss can be set off against any capital loss. Against any capital gain, whether it is short-term capital gain or whether it is long-term capital gain. In the relevant assessment year. In the relevant assessment year, such amount of short-term capital loss we can be set off against short-term capital gain and long-term capital gain. Number two, long-term capital loss. long-term capital loss. If there is any long-term capital loss, then the amount of long-term capital loss we can adjust or we can set off only against the long-term capital gain. Means the long-term capital loss will be set off only against the long-term capital gain. Long-term capital gain is that if there is any short-term capital loss, then the short-term capital loss we can set off against short-term capital gain and short-term capital and long-term capital gain. But if there is any long-term capital loss, then it can be set off, it can be adjusted only with the long-term capital gain, only with the long-term capital gain. It will not be adjusted, it will not be set off with the short-term capital gain. So the amount of long-term capital loss can be adjusted only against the long-term capital gain, only against the long-term capital gain. Loss under head capital gain. Loss under the head of capital gain. Net loss under the head of capital gain cannot be set off against income under any head. Means if there is any loss under the head of capital gain, then such loss cannot be adjusted with any other head of income. If there is a assessee, for the example, there is a assessee A, he has following income. Number one, salary income. For the example, 3 lakh, 2 lakh 75,000. And he has a house property income, 1 lakh 25,000. And he has capital gain loss, 75,000. So in this situation, such amount of capital gain loss cannot be adjusted with such amount. With the amount of such income, it will not be adjusted. It will not be adjusted. Means such 4 lakh rupees. Such 4 lakh rupees will be taxable. It will be considered as taxable income, and such 75,000 rupees is the amount of loss will be carried forward. It will be carried forward. Means net loss under the head of capital gain cannot be set off. It cannot be set off against any other head of income, against any other head of income. Maximum period for carry forward and set off the losses. What is the maximum period? Means for how many years we can carry forward and set off the capital gain loss. So if there is any unabsorbed amount of capital loss, if there is any unabsorbed amount of capital loss, then such amount you can carry forward maximum for the period of 8 years, maximum for the period of 8 assessment years. The amount of unabsorbed capital loss you can carry forward or set off maximum for the period of 8 assessment year from the year in which it was incurred. If the capital gain loss is incurred in the assessment year 2001 and 2, then 8 years from the assessment year 1 and 2 you will be count, and till these 8 years you will carry forward or you will set off the amount of capital gain loss. You will set off the amount of such capital gain loss. So the maximum period is 8 years. The maximum period is 8 years. Now we will discuss it by the way of example, and on the basis of such example, we will understand how we will compute the income which will be taxable under the head of capital gain, or what will be the amount of loss under the head of capital gain which will be carried forward. During the previous year 20 and 21, Mr. C has the following income. Mr. C has the following income. Number one, short-term capital gain on the sale of share. Short-term capital gain 1,50,000 on the sale of share. Long-term capital gain for the assessment year 2019-20 means carry forward loss. Long-term capital loss. Assessment year 1920. Assessment year 1920. 96,000 rupees. And short-term capital loss for the assessment year 20 and 21, 37,000. It is a short-term capital loss. 20 and 21, assessment year 20 and 21. It is minus 37,000. Long-term capital gain, 75,000. Long-term capital gain. It is 75,000 rupees. Now, on the basis of this, what will be the capital gain which is taxable in the hands of Mr. C for the assessment year 2021 and 22? What will be the taxable amount? What will be the taxable amount? Means what will be the amount which will be taxable under the head of capital gain? Under the head of capital gain. So first there is the short-term capital gain. There is a short-term capital gain 1,50,000 rupees. There is the short-term capital gain 1,50,000 rupees. Out of such a short-term capital gain, we will not adjust long-term capital gain, because if there is any long-term capital loss, then such a long-term capital loss cannot be adjusted with the short-term capital gain. So we can adjust the short-term capital loss less short-term capital loss for the 20 and 21, for the assessment year 20 and 21. It is 37,000 rupees. 1,50,000 minus 37,000. 1,13,000 rupees. 1,13,000 is the balance amount of short-term capital gain. Okay. Now there is the another long-term capital gain. Long-term capital gain. It is 75,000 rupees, and we will less long-term capital loss. It is 1920. Assessment year 2019-20. How much it is? Long-term capital loss is 96,000, but we can adjust up to 75,000. Up to 75,000. So the balance amount will be 0. And there is a 95,000 is adjusted. Means the balance is the balance will be this minus this. 21,000 rupees we will carry forward. For the next year, we will carry forward. So the income taxable under the head capital gain will be, it is 1,13,000. 1,13,000 is the amount of capital gain, means short-term capital gain, which will be taxable under the head of capital gain. Because short-term capital gain is 1,50,000 and adjusted 37, 1,13,000. Long-term capital gain was 75,000, but long-term capital loss is 96. Up to 75 we can adjust. So the long-term capital gain will be 0. Now the short-term capital gain is 1,13,000. So the answer is 1,13,000. How? Short-term capital gain on the sale of share is 1,50,000 less brought forward losses for the assessment year 20 and 21, 37,000. 1,13,000. Long-term capital gain 75,000. We will less brought forward long-term capital loss assessment year 19 and 20, 75,000. So the net and the taxable short-term capital gain. Taxable short-term capital gain is 1,13,000. Short-term capital gain is 1,13,000. So this is the amount which will be taxable in the hands of Mr. C under the head of capital gain. So 1,13,000 is the amount which will be taxable. So on the basis of such example, we have understood how we will determine the amount which will be calculated, which will be taxable under the head of capital gain after adjusting the losses. So the long-term capital gain cannot be set off. The long-term capital gain cannot be set off against the short-term capital gain. Hence, the unadjusted means such a 21,000 rupees, which is the long-term capital loss, we will carry forward to the next assessment year. and we will set off it in the next assessment year when there is any long-term capital gain. When there is any long-term capital gain. Now we will discuss losses from the activity of owning and maintaining race horses. If there is any loss which is arise from the activity of owning and the maintaining race horses, then such a loss can be adjusted. Then such a loss can be adjusted with the income which is arise from the activity of owning and maintaining horse races. Is that the loss from such activity is adjusted, it is set up only with the income from same activity, only with the income from same activity. It will not be adjusted from any other income. Section 74A subsection 3. Section 74A subsection 3. Number 1, set off and carry forward, set off and carry forward and set off of losses. According to the section 74A subsection 3, if there is any loss, which is incurred by the assessee, from the activity of owning and maintaining the race horses, such a loss from the owning and maintaining the horse races, and such amount of loss, then such amount of loss can be adjusted, it can be set off only from the income which is arise from the same source of income, which is arise from the owning and the maintaining race horses. Such a loss cannot be adjusted, with any other source, with any other income. It will be adjusted only with the same, only with the income from same source, only with the income of same source. So, according to the provision of section 74A subsection 3, the loss which is incurred by the assessee from the activity of owning and maintaining the race horses cannot be set off. It cannot be set off. Such a loss cannot be set off against income from any source other than activity of owning and maintaining the race horses. Maximum period of carry forward. Maximum period of carry forward and set off of losses means for how many years we can carry forward and set off these losses, for how many years we can set off these losses. So such a loss can be carried forward. The loss can be carried forward for the maximum period of 4 years. The loss from the activity of owning and the maintaining race horses, we can carry forward or we can set up such loss maximum period of 4 years. Maximum for the period of 4 assessment year for being set off against the income from the activity of owning and maintaining race horses in the subsequent year. Means such amount of loss we can carry forward maximum for the period of 4 years. Maximum for the period of 4 assessment years. Now we will discuss some specific and the certain meanings. Now we will discuss or we will understand certain terms. Number 1, amount of loss which is incurred by the assessee in the activity of owning and maintaining race horse. Amount of loss. What is the meaning of amount of loss which is incurred by the assessee in the activity of owning and maintaining race horses? In case when there is an assessee has no income by the way of statement. Amount of revenue, expenditure incurred by the assessee wholly or exclusively for the purpose of maintaining the race horses. When he has no stake money and he is incurring the expenses wholly and exclusively for the purpose of maintaining race horses. So in this situation, there will be the amount of loss. Because there is no money, means there is no income, but there is the expenditure. So there will be the loss. Number 2, in the case when there is any assessee has income by the way of stake money, the amount by which such income by the way of stake money falls short of the amount of expenditure, means the amount of stake money is less than the amount of expenditure. The amount of stake money is lesser than the amount of expenditure. So in this situation, there will be the amount of loss. There will be the amount of loss from the activity of owning and maintaining the resources. So this is the meaning of amount of loss which is incurred by the assessee in the activity of owning and maintaining the horse race. Means when there is any no expenditure, sorry, there is no income, but there is expenditure, or there is any income, but the amount of income is less than the amount of expenditure. But the amount of income is less than the amount of expenditure. So there will be the loss. What is the meaning of horse race? What is the meaning of horse race? A horse race upon which worrying and betting may be lawfully made. Means the horse race on which betting is lawfully applicable. Betting is lawfully available. Income by the way of stake money. What is the meaning of income by the way of stake money? So the gross amount of price, the gross amount of the prize money which is received on a racehorse or race horses by the owner thereof on the account of horse and horses or anyone, or more of horses winning or being placed second or in the lower position in the horse races. Is that when there is any prize money which is received when there is a winning of horses, then it will be known as income by the way of stake money. Then it will be known as income by the way of stake money. Means the gross amount of the prize which is received on the racehorse on or racehorse by the owner, therefore on the account of horses and the horse, or anyone or more of the horses winning and being placed second or any lower position in the horse race, then such amount will be known as, such income will be known as stake money. Such income will be known as stake money. Now we will discuss a example. And on the basis of such example, we will discuss how we will calculate the amount which will be taxable, amount of income which will be taxable in the hands of assessee. Mr. D has the following income. He has the following income for the previous year 20 and 21. He has the following income in the previous year 20 and 21. Income from the activity of owning and maintaining the horse race. There is a assessee D. And he has income from owning and maintaining the race horses. Sorry. Of horses. And the income is 75,000. Sorry, 75,000 rupees. The amount is 75,000. Income from textile business. Income from textile business. For the example, it is 85,000 rupees. And brought forward textile laws. Brought forward textile laws for the assessment year 20 and 21. Assessment year 20 and 21. This is the amount of losses. Sorry, the amount of loss is 50,000. This is the loss, 50,000. Next, brought forward loss from the activity of owning and maintaining the horse race. Brought forward of losses. Brought forward losses from the owning and maintaining the horse race for the assessment year 18 and 19. assessment year 2018 and 2019. The amount is 96,000. The amount is, the loss amount is 96,000 rupees. Now, on the basis of this, what is the total income in the hands of Mr. D for the assessment year 20 and 21? Now, there is a requirement to calculate the income which will be taxable, or the total income which will be taxable in the hands of Mr. D. So, number one, we have income from owning and race horses. Race horses. So it is 75,000 rupees. It is 75,000. Okay. But there is the brought forward of losses. Brought forward of losses. Assessment year 18-19, but now the assessment year is 20 and 21. Sorry, 21 and 22. 21 and 22. And the loss is 96,000, but we can adjust up to 75,000. We can adjust up to 75,000. So the income from winning from lottery, sorry, winnings from owning and maintaining the resource is 0. There is the income or the profit from textile business. It is 85,000 rupees. It is 85,000 rupees, but we have the loss from textile business. Brought forward losses of textile business. It is 50,000. So the balance amount, it will be taxable. Means 35,000, it will be considered as income from textile business. It will be considered as income from textile business. So the total income will be only such 35,000. 35,000 plus this one, 0, 35,000. And we will carry forward. How much carry forward? It is 96, but we have adjusted only 75,000. So 96 minus this, 21,000 rupees we will carry forward. So in this situation, income from activity of owning and maintaining the raw horses is 75,000 less 96,000, but we can adjust up to 75,000 rupees, and the 21,000 loss we will carry forward. So the loss from the activity of owning and maintaining race horses to be carried forward to the assessment year 22 and 23, which is 21,000 rupees. Income from textile business 85,000 and adjusted brought forward loss 50,000. 35,000 is the amount of total income which will be taxable. The total income which will be taxable is 35,000. So note, the loss from activity of owning and maintaining the race horses cannot be set off against any other source of income. Means such 21,000 we cannot adjust with such 35,000, because the loss from owning and maintaining the race horses will be adjusted only with the income from same activity, only with the income of such same activity. So the taxable income is 35,000 rupees, and 21,000 rupees will be carried forward for the next assessment year. Now we will discuss order of set off of losses. What is the order? Means in which order we will set off the losses. As per the provision of section 72 subsection 2, brought forward loss is to be set off before setting off unabsorbed depreciation. Means if there is any brought forward loss, then the brought forward loss is to be set off before setting off unabsorbed depreciation. Before unabsorbed depreciation, we will set off the amount of brought forward losses. Therefore, the order in which the set off will be effected as follows. First, we will reduce current year depreciation. from the income, from the total income, first we will reduce current year depreciation. Then after we will reduce current year capital expenditure on the scientific research and current year expenditure on the family planning. From the family planning to the extent allowed. Brought forward losses from business and profession. Brought forward losses from the business and profession. Brought forward losses from the business and profession and unabsorbed depreciation. Then we will reduce unabsorbed depreciation and then unabsorbed capital expenditure on scientific research. Unabsorbed capital expenditure on scientific research and unabsorbed expenditure on family plan. Unabsorbed expenditure on family plan. So first we will calculate the amount of total income. First we will calculate the amount of total income, and from the total income we will reduce current year depreciation. Current year depreciation. Then current year capital expenditure. Current year capital expenditure which are incurred on the scientific research. Which are incurred on the scientific research. And current year expenditure on family planning. Current year expenditure which is made on family planning. Then we will reduce or we will set off brought forward losses from business and profession. Brought forward losses from the business and profession. Then unabsorbed depreciation, and then unabsorbed capital expenditure on the scientific research. Unabsorbed depreciation on the scientific research. And then after unabsorbed expenditure on family plan. This is the sequence. This is the sequence of set off. Now we will discuss a example, and on the basis of such example we will understand how we will set off all these things. Number 1, Mr. E has furnished his detail for the assessment year 21 and 22. Mr. E provided detail. Okay. Income from salary. Income from salary 1,50,000, and income from speculative business. Income from speculative business. 60,000 rupees. Loss from non-speculative business. Loss from non-speculative. It is 40,000. And short-term capital gain 80,000. And long-term capital loss. Long-term capital loss for the assessment year 2019-20. 30,000 rupees. And winnings from lottery. Winnings from lottery is 20,000 rupees. This is the total detail which is furnished by the E. So what will be the taxable income of Mr. E for the assessment year 21 and 22? What will be the taxable income? So first there is the salary income. There is a salary income of rupees 35,000. There is a salary income 35,000 rupees. From the salary income, there is 35,000 rupees. And now there is the income from speculative business and loss from non-speculative business. So income from speculative business. This is 60,000. We will adjust, or we will set up income from, loss from. It is a loss from non-speculative business. 40,000 rupees, because as per the provision, the loss of speculative business cannot be adjusted with the income of non-speculative business, but the non-speculative business loss can be adjusted with the speculative business. But the loss of non-speculative business can be adjusted with the income from speculative business. So the balance will be taxable. 20,000 only. 20,000 only. There is the short-term capital gain. There is the short-term capital gain, which is 80,000 rupees. And we cannot adjust long-term capital gain with the amount of short-term capital gain. With the amount of short-term capital gain. So it will be carried forward. And there is the another winnings. Winnings from lottery, which is 20,000. Which is 20,000. So this is the, so first there is the salary income. So there is the salary income is 50,000. 1,50,000. 1,50,000 is the salary income. The total income will be 2,70,000. This is the total income. Well, 2,70,000. So in this situation, such amount will be carried forward. 30,000 rupees will be carried forward. So in this situation, salary income 1,50,000. It is 1,50,000, and the loss from speculative business 60,000, less loss from non-speculative business 40,000. Means 20,000 will be taxable. 20,000, and capital gain total taxable, because the long-term capital loss cannot be adjusted with short-term capital gain. Winnings from lottery 20,000. So the total taxable income is 2,70,000. Sorry, 2,70,000. 2,70,000 is the taxable income. It is a taxable income. So the long-term capital gain cannot be set off, can be set off only against the long-term capital gain. If there is any long-term capital loss, then we can set off it only against the long-term capital gain. Therefore, the long-term capital gain 30,000. This 30,000 we cannot set off with such short-term capital gain, and we will carry forward it. We will carry forward it for the next assessment year. For the next assessment year, we will carry forward it. Now we will discuss the summation of return of losses. Summation of return of losses is that if there is any assessee who incurred the losses, then there is a requirement to submit the return. There is a requirement to submit the return of losses. Section 80 of the Income Tax Act, submission of return of losses. As per the section 80, when there is any business loss under section 72 subsection 1, speculative business loss under section 73 subsection 2, loss from the specified business which is defined in section 35 AD under section 73A subsection 2, loss under the head of capital gain under section 74 subsection 1, and loss from activity of winning and maintaining race horses under section 74A subsection 3. These are the sections, these all are the losses in which the return, means the loss return, is required to be filed, is that which has not been determined in the pursuance of a return filed under section 139 subsection 3, cannot be carried forward and set off. Is that if these losses, if in the respect of these losses, the return is not filed in the respect of any business loss, in the respect of capital gain loss, in the respect of loss from activity of owning and maintaining race horses. If in the respect of these losses, if the return of income is not filed, within the period of date of filing of income tax return, within the date of filing of income tax return, then there is a requirement to file the income tax return within the period of Means the within the period which is defined in section 139. If the assessee does not file the income tax return within the limited period, then the assessee is not eligible to carry forward these losses. Then the assessee will not be eligible to carry forward the losses which has not been determined in the pursuance of the return which is filed under section 139 subsection 3, then such assessee will not be eligible to carry forward a set of the return. Thus the assessee is required to file his loss return. He is required to file his loss return under section 139 subsection 3 to carry forward and to set off the losses. To carry forward and set off the losses is that, for the example, there is a assessee A and he has business loss. He has business loss of rupees 5 lakh. Then he is required to file loss return under section 139 subsection 3, under section 139 subsection 3 to carry forward and set off such a loss. If such a return is not filed by the assessee, then such assessee shall not be eligible to carry forward and the set of such losses. The losses are relating to the business loss, speculative business loss, specified business loss, capital gain loss, and the loss from activity of winnings and maintaining race horses. But section 80 does not include loss from house property. Loss from house property is not here. Is that such a return of loss should be filed within the time period which is specified under section 139 subsection 1. However, this condition is not applicable. This condition is not applicable in the case when there is any loss which is arise from the loss from house property. Is that in the case of if there is any assessee, he has any loss from house property and he has not filed the loss return, then in this situation he will be eligible to carry forward and he will be eligible to set off such a house property loss. Means in the respect of house property loss there is no this type of condition. However, this condition does not apply to the loss from house property which is carried forward under section 71b. And unabsorbed depreciation carry forward under section 32 subsection 2. Means this condition is not available when there is a loss from house property and in the case of unabsorbed depreciation. Means if you have not filed the loss return in the case of loss from house property, then you are eligible to carry forward and set off these loss. So on the basis of such a discussion, we have completed such full concept of aggregation of income, set off and carry forward of losses. We have covered such concept in 3 parts, part 1, part 2 and part 3. All the parts are covered by us and this is very much important concept. So kindly consider all the videos of such class so that you can properly understand each and every concept of such a topic. So thank you so much for watching this video. Okay, bye-bye and have a nice day.